Hey guys, welcome back to another episode of Lions Den Investments and Reviews. My name is Casey. In today's video, it's Tuesday, April 20th. I wanted to talk about the crypto flash crash that we had over the weekend, and then cover a few articles here on the fear, uncertainty, and doubt, or FUD, that I think honestly caused a bunch of this panic and caused Bitcoin to come crashing down from all-time highs here at about 64,900 on down to at the lowest point about 51,480. Okay, but before we get into all this fear, uncertainty, and doubt, you know, if you pay attention to this channel, I always talk about being a lion versus a sheep, and I just wanted to play this video for you because this is what people do when they buy into FUD, okay, and they start believing the hype when it comes to fear, uncertainty, and doubt, is they become the sheep, all right, and what they'll do is they'll sell at the all-time lows here, and then they wait for things to kind of pan out, and they think maybe it might fall further. Then the price goes back up, and they wait until we get back up to all-time highs like this, and they buy back in. So if you noticed, like with the Coinbase listing, for instance, right back last week when the Coinbase listing happened, you saw the entire market just take off, right? And you had all this new blood coming in from the traditional markets into cryptos. And what were they doing? They were buying in here at the all-time highs. And so what happened? We took a big crash, okay, and get back down to 51,000, and people panicked and sold, lost their money, and now guess what they're going to do? They're going to think that this thing's going lower, it's going to turn around, and this is of course speculation, but this is what the sheep will do, like that are coming into investing, thinking they're investors, and they're not really investors. They've got a lot to learn because this market's completely different than traditional markets. But what do? They think it's going to go lower, and then it turns right around and it jumps all the way back up to all-time new highs, and then they do the same thing over again. They jump back in at all-time highs. But uh, if you don't know what I'm talking about, watch this video here because this is how sheep behave as well. Okay, check this out. This little kid, he's pulling this sheep out. Got stuck. Okay, that doesn't want to go anywhere. It's thank you, thank you. Okay, now it takes off. Whoop, what's it do? Whoop, jumps right back into the little crack again. Does it all over. Gets stuck. I'm gonna play it one more time for you. Yeah, I just got a good kick out of this because it ties right into what I was just talking about with people investing. They do the same thing. They get stuck. They buy at all-time lows or buy at the all-time highs, sell at the lows, turn around and do it right over again. You know, rinse and repeat. You do not want to be a sheep. Okay. Basically, that's the moral of that story. That's the message behind that video there. Don't be a sheep. Be a lion. You want to rip the jugular off of this market. And if you're one of those people who want to do that, subscribe to the channel. Hit the like button. Let's get into the material here now. So with Bitcoin, I'm not going to do a whole lot of technical analysis today on Bitcoin or any of these other cryptos because right now I'm more focused on the fundamentals. Now, if you've been watching my previous videos, I talked about how bullish I was on the market. That hasn't changed one bit, okay? Um, with that being said, though, let's go over here. You have to be cautious, okay? And a lot of people are saying, well, is this bull market run over, and are we heading lower? Well, if you look at the 4-hour chart here on Bitcoin, we got a double bottom right now on the 4-hour, and a double bottom is a reversal pattern upwards. So it looks like we found some good support here, right around like $55,000. Okay, so I'm watching that right now because I'm expecting this double bottom to play out, and then we head back up, to higher prices. However, though, we did break weekly support here, and we do have weekly support, which is now turned into resistance on Bitcoin. So I'm looking at as if we can head higher here from where we're at, we might come back up to about $60,450 or so, and from there we'd be testing new resistance. But if we go to the daily real quick on Bitcoin, and the reason why I'm doing Bitcoin again, guys, is because Bitcoin right now it is the dominant crypto, And whatever Bitcoin does is going to affect the rest of the market here, okay? But look at this. Even if you took this higher low and you move another one down here where we just dropped, look, you still got a higher low, okay? We're not down here. We kind of retested that just with the wick, but here's your a higher low. You still have a higher low right here as well. So, you know, if you look at this, I would say honestly, until we drop and we form a lower low, we're still in a bullish pattern here, and I'm expecting prices to kind of bottom out here around like that $54,000-$55,000 mark, and then we head higher. But let's look at the FUD that caused all this. Um, so they were talking about China's blackout, which dropped the hash rate of Bitcoin, okay, and dropped it over 45%. Um, Now, I really don't buy into this too much. Basically, what it came down to is the blackout caused a bunch of the miners that were confirming transactions on Bitcoin to get off the network. Therefore, there was less miners available to confirm transactions. So the difficulty of confirming transactions on Bitcoin actually went up. And with the difficulty of mining transactions becoming harder, okay, um, it slowed down the network on Bitcoin big time, and because of that, they're saying the price dropped. To me, it really doesn't, really doesn't make sense to me that this would cause something like that, and cause the markets to drop that much. Okay, uh, we've seen this kind of stuff before, and the fact that it happened on a Saturday night as well kind of raised a red flag. But this to me, guys, is nothing more than fear, uncertainty, and doubt. It's not. Bitcoin's not going away. Okay. Is it a risky investment? Yes, like anything else in life, that there's risk to investments. But if you look at like the target prices that J.P. Morgan, for instance, has on their call options for Bitcoin, on the long term, they've got Bitcoin options and contracts where they've actually got money involved in this stuff right now, and they're talking about Bitcoin at $130,000. So, you know, they don't lose money, and with those kind of prices in play right now, there's huge amounts of money, and that's being you know placed on the markets in bets for Bitcoin going to those prices still. So I don't see something like this uh, taking us into a bear market, anytime soon. Here's the other piece. Now this goes into regulation and clarity, because the other thing they were talking about was that the U.S. Treasury was going to go after big financial institutions for money laundering in Bitcoin. Okay. Again, where's the evidence of that? The only thing that I found so far here is that the U.S. SEC is expected to impose fair amounts of regulation on cryptocurrencies, says a former chairman. Okay, now this former SEC chairman is Harvey Pitt, and Harvey Pitt says, "I expect to see a fair amount of regulation in cryptocurrencies. Right now, I think the rules are unclear." And then he goes on and says, "There's a real question about where jurisdictions lie, and there may be a need for clarifying legislations. The SEC has already taken the position that Bitcoin and Ethereum are not securities, and therefore there is no regulatory involvement on the SEC's part." Okay, now that's the big uh, gorilla in the room, I guess you could say, that is right next to what you've been seeing with China rolling out their U.S. digital, or rolling out their central bank digital currency. Sorry about that. I was about to say the USDC, but that's not the case, because China's got their own digital yuan. That's a gorilla in the room as well. The one here that I'm talking about is with XRP and the SEC case, because you know coming from Pitt here, being an American lawyer who served as the 26th chairman of the U.S. Securities and Exchange Commission from 2001 to 2003, coming from him, like what he's saying here, about all of the the rules being unclear and whatnot. What he's pointing at is what's to come out of something like this XRP and SEC case. I think once we get regulation and clarity from that, you're going to see some of this fear, uncertainty, and doubt, and rumors like the U.S. Treasury going after financial institutions for money laundering. You're gonna get a better picture as to what they're doing. Um, are there people out there that are doing criminal activities with Bitcoin? Yes. Okay, and there's financial institutions as well that are probably doing that. Uh, the nice thing is though here with the new chair, the SEC chair, Gary Gensler, he was confirmed last week. With him coming in, okay, he used to be a professor at MIT and taught blockchain to developers there. So he understands cryptos a lot better than some of his peers before him that came into office and served in the same role or position. So with that clarity and already having that knowledge about blockchain in place, okay, he can still uh, change the rules, all right, create new regulations and stuff like that. But I think he sent a more of a message as to, to people in regards to, hey, don't play with us. We will come after you if you're, committing criminal activities with Bitcoin and cryptos, thinking you can get around the system. He needs to send a clear message to everybody, letting them know, look, we're for real here, and we will come after you. But when it comes to just like shutting people down, like what they were trying to do with Ripple there, and just go after them after 8 years of working with the SEC. Um, yeah, I think you'll see the SEC more than likely play a different tune in regards to that. So let's move on to the next article here. This one is XRP Ripple lawsuit effect, understanding SEC's mission with crypto markets. Okay, with the SEC adopting a theoretical approach of inducing general fear and making businesses think that they're the next ones to be prosecuted, entities try their best to comply with the regulations and avoid risk of being investigated. Recently, after the SEC charged crypto company Ripple for alleged illegal security offerings through XRP, the company's CEO Brad Garlinghouse expressed his displeasure at the same time. According to him, the SEC lawsuit was an attack against the entire crypto ecosystem. These sentiments have been echoed by many in the crypto ecosystem. And then there's a recent Wall Street opt titled "The SEC's Cryptocurrency Confusion" criticized SEC for its approach to regulatory cryptocurrency market, the article stated. The findings by Judge Netburn in the Ripple case suggest that the agency hasn't set clear rules for which currencies it regulates and which it doesn't. Okay, so again, this XRP and SEC case is, I think, once we get through with this, going to create a lot more clarity on that regulation that we're talking about, which again, going back to the beginning of the video, right now is just fear, uncertainty, and doubt that's dropping these markets. Um, then Ashley Ebersole, a former SEC Enforcement Senior Counsel member, in a recent interview said, even though people in the DeFi, FinTech, or digital asset space might disagree, but part of the SEC's mission is to promote capital formation. So they're talking about the framework, okay, for these regulations on cryptos. She then goes on to say, I think we're certainly falling behind the curve. We've seen other countries take a more productive approach to regulating crypto. Our approach has been to say no and tell people to wait. We need to build a framework that is appropriate for this industry. She further adds, I don't see the SEC in any instance trying to prosecute every violation, especially in the digital asset space. This is one of the common complaints that several people, including Commissioner Pierce, have had, that we do not have enough regulation to tell people how they need to behave. Um, and then at the very end here, she added, yes, you have to step carefully, but at the same time, you don't have the risk. You don't have the risk of a regulator swoop in and say that that was an illegal offering, therefore, or there is an opportunity cost to compliance in addition to the cost of actually complying. Um, so it hurts both sides. It's taking that kind of approach where what they did here with Ripple, moving forward, it's going to be a lose-lose for everybody. Okay, so that was her concern, is that they changed their approach, so we get a shift in the SEC's approach to regulating cryptos moving forward. And guys, to me, that is still bullish. Okay, and like I always say in my videos, I'll wrap the video up here because I've been going on a little longer than normal reading these articles. So I apologize if I've bored you guys with that, but we'll go ahead and wrap up the video, and I'm going to wrap it up with what I normally talk about, which is these big banks are coming in and shaking people out, especially this new blood getting in from, say, the Coinbase IPO, who are becoming more aware of cryptocurrencies. They're buying in at all-time highs. They're shaking them out, okay? Because, again, this new blood doesn't know what they're getting involved with, and they end up like the sheep, like you saw at the beginning of the video, jumping into the crack and getting stuck, and then having to do it again once they get out, and they jump right back into it and make the same mistakes. So you don't want to be a sheep, okay? Like I said, you want to be a lion and rip the jugular off this market. And with that said, that's all I've got for today. Hit the subscribe button, helps with the YouTube algorithm. Hit the like button as well if you like the content. And with that said, I'll see you guys in the next video.